Hi, I'm Stock Investor Davis. Welcome to the channel and please subscribe. Let's take a look at NVDA. Last time we checked on this company, we were going into its fourth quarter for 2023. Since then, they've released their results. So what I want to cover today is how I'm currently valuing this company in terms of a stock price. We'll even look at the guidance that management's given us and value it looking forward. We'll take a look at the technical analysis, its financials, and then we'll end up wrapping up with the news portion. So let's just jump into it. Starting off with its valuation. Currently, its trailing 12 months earnings per share is $11.93. We can see the breakdown on the top right of that roughly $12 in earnings per share. And right now, I'm using a range of between 50 and 88 times its earnings. Probably a round figure to use would be between 60 and 80. But when I look at the past, and I'm primarily looking at the past 4 years, this seems to be the average, roughly between that 50 to 88 range with the average of 69. So using those two figures, we can calculate that the low for me in terms of a fair value for this company is right around $597. And then the high, using that 88 times multiple, puts us at around $1,050 per share. So to see the company right now trading at $900, that's definitely on the high end for right now. Still within that fair value range, but we can see it's clearly on the high end. What about the guidance? So management has, and this is kind of small, so I'll just read out the bullet points here. For its first quarter, for its fiscal year 2025, they're projecting revenue of about $24 billion with gross margins somewhere between, or actually right around 76%, operating expenses to be about $3.5 billion, other income around $250 million, and then a tax rate of 17%. We'll look into the financials shortly, but for right now, just using these figures, I plug those into my projections for financial statements, and we're able to come up with this result that with these projections, the sales for the trailing 12 months would be updated to about $77.7 billion, with net income of about $40.2 billion, and the shares outstanding would remain roughly the same at about 2.5 billion shares, which all boils down to earnings per share of $16.13. When we apply that new earnings per share figure to our price to earnings range that we established earlier, that 50 to 88, we then see going into next quarter, my fair value range for this company has now elevated up to a low of 806 and a high of 1,419, making the current price around 900 now, seemingly a great time to pick this one up, with that estimated price to earnings at about 56, 55.8 to be exact, which is very low on that fair value range. Of course, we have to factor in that this is just projections. We can't guarantee that this will happen. That said, this is what management is giving us, so we're just going to roll with that as best we can. A little side-by-side comparison we have here. Right now we can see the fair value range that I'm estimating between about 600 and 1,000, making that 900 price right now looking like it's kind of overvalued, but it's still within that fair value range, so I wouldn't mind picking this up. Then looking forward, then it actually starts to look like a better deal. Again, it's still on that fair value scale, but it's now on the buyer side. So depending on how far out you want to look at this company, if you're able to look out a couple months into its next quarter, it actually looks like a decent price to pick this one up. If you're looking at it right now with the intention of, say, selling it next week, it's actually kind of high. But again, still within that fair value range. Let's now pivot to the technical analysis piece. This is just applying my valuation now to the actual technical chart. So here we are right now, right around $900. And let me zoom out just a little bit. So I have these boxes in here, these green and red boxes. I'm looking at this green box in particular. That's that price to earnings at 55. And then this red box up here is that price to earnings at 88. This is, I believe, 50, and this is 88. These other red boxes, that's factoring in price to sales, which it is a valuable metric to use, but with this company, price to earnings seems to be the dominant figure. That's the one we're working with. So we'll probably see those price to sales boxes kind of phase out over time, but right now they are still at least on the screen. So when I'm looking at this, again, right now, here's that low, here's that high. You can see we're right in the middle. It's then going forward into next quarter. I actually have to make this a little bit smaller. This is right here. This is now my fair value range. This down here would be 50, and up here would be about 88. So with that 900, you can see we're at the lower end of it, whereas right now we're kind of right in the middle, definitely on the higher side, but roughly in the middle. And then what I like to do is add these lines. This is probably the clearest depiction of that. If this company were to all of a sudden skyrocket in price to, we'll say 1100, theoretically for me specifically, technically that would be overpriced because it's over that 88 times multiple. But when we're looking ahead, 1100 at this point in time would actually still kind of be within my fair value range. Definitely on the high side, but because of we're kind of anticipating this trend upward into this bracket, that kind of would be okay. But yeah, that's just kind of how I'm looking at it. And I want to just kind of give us some foresight also. This is what the analysts are saying. And I have to zoom out a little bit further. After zooming out, we can see just the potential for this company. Now, for me specifically, these are the only boxes that I'm most concerned about right now. This box that I put out here, and we'll dig into the financials shortly, this range out here between roughly 1200 and what would that be, 2150, this big range out here, that's what analysts are projecting. Again, I'm using my system, but with the analyst figures. So NVIDIA hasn't given us any real insight into this. They did give us, I believe, operating expenses, what they project for the full year, but otherwise they haven't given us any full year revenue projections, anything like that. But analysts have. They're willing to take a guess on what they think this company will do. When we plug those figures in, using my current system, this is what I would project the company to be trading at. Again, this is way out there. This is roughly a year in advance, but that's the potential that this company has. So let's not get too far ahead of ourselves. Let's take a step back. Let's take a look at its financials to see how I'm further coming up with these figures. All right, so here are the financial figures for this company. Hopefully this isn't too messy for us, but what we have here is this color-coded system here. The blue, that's my judgment. That's what I'm using other information that NVIDIA has given us, news articles, and just combining everything into these blue figures. We also have these green checkpoints. That's what NVIDIA has given us. So I'm able to use a lot of these figures to help my own judgment. And then we'll notice some of these yellow figures in here. That's what the analysts are saying. And I'm going to note that this was actually taken in April 1st. So not too long ago, but I point that out because if you were to check today, for instance, some of these figures might change a little bit. I wouldn't expect them to change all that much, but they just tend to kind of fluctuate a little bit as news articles come out and what have you. So anyway, what I want to look at here is right here, this is the main section that I'm looking at. We can see the full year for 2024. We can see last quarter, that's right here. And then we have the categories off here on the left. So looking out to its next quarter, this is what they're projecting, that $24 billion in revenue, operating expenses to be about $3.5 billion, that total other income, $250 million, and then gross margins at about 76.3%, tax at 17%, and then all these blue items, that's me. So in terms of gross margins, we're just using more or less what it did last quarter, which they had gross margins of that 76%. Operating expenses, again, they gave us that, so we were able to pull that right down. Not much else has changed in the first quarter. Looking out to the second quarter, we're kind of rolling with the analysts here. If the analyst figures are correct, then this will all kind of line up perfectly. But we'll see, of course, how it goes, and I'll try to add my own insight as I can. But in terms of revenue, right now analysts are projecting for its second quarter for 2025 to be about $26 billion. Seems reasonable. It does seem like NVIDIA keeps adding, at least last quarter they added about $2 billion. We'll see if that trend continues. If that trend does continue and we see, say, 26 in the second quarter, 28 in the third, and then maybe 30 in the fourth, that would give us this 110, which again, analysts are projecting. If we do that, they're also projecting these earnings per share, $5.84 and $24.44. Doing that, we can then multiply by the shares to get us these figures, this 14 billion roughly for the second quarter and 60 billion for its full year. We'll of course see how this all develops over time. I just wanted to kind of put this on the screen so you can see just the figures that are going into my valuation. But let's kind of wrap up now with the news. Looking at the news, so a handful of articles have come out, all positive for the most part. In fact, probably in its entirety, all pretty good news here. So just some headlines. So ServiceNow and NVIDIA, they're expanding their relationship with introduction of telco-specific Gen AI solutions to elevate service experiences. And I just put off on the side how there was no mention of SoundCloud, which seems to align with this telecommunications type Gen AI solutions. So I was a little surprised because I know SoundHound is one of NVIDIA's kind of investments. We also see NVIDIA and HP supercharged data science. HP will be using NVIDIA products in its AI workstations. Next, we also see TSM and Synopsys. They're bringing breakthrough NVIDIA computational lithography to production. This one was interesting to me just because so much of NVIDIA seems to be providing these chips to allow other companies such as the Microsofts, the Apples, all these bigger tech companies to push out new products. This one's interesting because it actually looks like NVIDIA is going upstream because NVIDIA goes to TSM to make the chips. Well, NVIDIA is here saying that TSM and Synopsys are going into production with NVIDIA's computational lithography platform to accelerate manufacturing and push the limits of physics for the next generation of advanced semiconductor chips. The semiconductor manufacturing process consumes tens of billions of hours per year on CPUs. A typical mask set for a chip could take 30 million or more hours of CPU compute time. With accelerated computing, these 350 NVIDIA H1 systems can now replace 40,000 CPU systems, accelerating production time while reducing cost, space, and power. Our work with NVIDIA has resulted in great leaps in performance, dramatic throughput improvement, shortened cycle time, and reduced power requirements. and that's the CEO of TSM saying that. Just very interesting to see NVIDIA is actually going upstream. So shows kind of how great their product is. Next, we also have Blackwell platform has arrived. This is their next GPU, I guess, hardware or software. Anyway, it's enabling organizations everywhere to build and run real-time generative AI on trillion parameter large language models at up to 25 times less cost and energy consumption than predecessors. It features 6 transformative technologies for accelerating computing, will help unlock breakthroughs in data processing, engineering simulation, electronic design automation, computer-aided drug design, quantum computing, and generative AI, all emerging industry opportunities for NVIDIA. Among the many organizations expected to adopt Blackwell are Amazon Web Services, Dell Technology, Google, Meta, Microsoft, OpenAI, Oracle, Tesla, and xAI. Lots of big names in there, and that's why we like NVIDIA. They're working with these other big companies. Moving on, we have the AWS and NVIDIA. They publicly announced that they're going to extend their collaboration. So Amazon and NVIDIA announced the new NVIDIA Blackwell GPU platform is coming to AWS. This is the NVIDIA GB200 Grace Blackwell Superchip. NVIDIA research and development teams will use SIBA to advance AI and for large language models, graphics and simulation, digital biology, robotics, self-driving cars, NVIDIA Earth 2, climate prediction, and more. AWS and NVIDIA have teamed up to expand computer-aided drug discovery for generative chemistry, protein structure, prediction, and understanding how drug molecules interact with targets. Also working together to launch generative AI microservices to advance drug discovery, medtech, and digital health. This is probably going to be coming up more, I expect, in the near term, how NVIDIA is going to be helping the health sector. So we're just going to be mindful of that going forward. Next, we have Microsoft and NVIDIA expanding their collaboration across Microsoft Azure, Azure AI Services, Microsoft Fabric, and Microsoft 365. Next, we have Google. To continue, Google announced its adoption of the new NVIDIA Grace Blackwell AI computing platform, as well as the NVIDIA DGX Cloud service on Google Cloud. Additionally, the NVIDIA H1 powered DGX Cloud platform is now generally available on Google Cloud. Oracle and NVIDIA today announced an expanded collaboration to deliver sovereign AI solutions to customers around the world. Next, we have SAP and NVIDIA announced a partnership expansion focused on accelerating enterprise customers' ability to harness the transformative power of data and generative AI across SAP's portfolio of cloud solutions and applications. And finally, we have NVIDIA announced a 6G research platform that empowers researchers with novel approach to develop the next phase of wireless technology. This one is also another bigger announcement, in my opinion, because I want to say it was maybe a year, maybe 2 years ago, where one of my buzzwords for this industry was 5G. Well, now it looks like 6G is going to be one of the upcoming buzzwords that comes out as just technology continues to advance. That wraps this up. Thank you for watching. Please subscribe. And if you have any questions, feel free to let me know.